Hey everyone, welcome to Financial Revelations. I am your host, David Szafranski. I'm on Twitter. We have the book. I wrote a book called The Sin of Retirement. You can go to the website, sinofretirement.com. You can buy the book. You can buy merch there. I just put a shirt up there that says Gulf of America. You got to have that shirt. I wore it out to breakfast in Hawaii the other day, and I did notice some people wanting to punch me, but the problem is for them, my biceps are huge and they're afraid of me, obviously. Not that I am not a violent person. I love people. So I wrote this book called The Sin of Retirement. Yes, the title's provocative. Yes, imagine that. It's available in an ebook, and we also have an audiobook, and it's available on Amazon. We have a mission trip coming up in March, but it's sold out. Can't take anybody else. We won't take anybody else, but we might be doing a second trip next year that you could also go on, and that would be in July. So if you didn't make it on this one, there's always another one. And so I want you to keep those things in mind. I want you to go on Twitter and follow me. I want you to like this podcast and subscribe to the podcast. It does it help us out? No, not one bit. But they say you're supposed to do those things. So do I care if you like my podcast? Yeah, I guess I do. I kind of don't. Whatever. I'm going to do it anyway. So, and I'm going to say what I want to say. I think that's what people like about me. People love me. I don't know. People like me because I say what I think. I'm not trying to sugarcoat it. I tried that early on in my career. One of our clients wanted to buy a house. He was a football player, and I thought, well, he was buying a condo, and his coach told him that he was going to be the quarterback of the future, and I didn't think that was true. Not because he wasn't a good player. He was. I didn't think it was a good fit there. And what I should have told him is, I think that's a great idea that you buy a house in the city that you want to live in forever, but don't buy it here. He bought it there. He wasn't the quarterback of the future after all, big surprise. And he lost a lot of money on the house, and then he blamed me. Well, it wasn't my fault, but I did, someone had to take the blame. It was going to be me. And I learned a valuable lesson. Tell people what you think. And this platform gives me an opportunity to tell people what I think. And when it surrounds money or politics, I think I'm pretty much 100% right. Now, do we have stock losses? Do we have losses in portfolios right now? There are a few things that we're losing on, but by and large, we are just killing it. And these last 5 years have been the best 5 years of my career, money-wise. Some of it has to do with the market growing. There's a lot of, we've made some awesome picks. There's no doubt about that. So one thing I want to share with you is the AI trade is not rolling over. I've heard this. I heard it yesterday on the radio driving home. Well, obviously the AI trade is rolling over. We like to talk about things like in baseball analogies where we say, well, we're in the 5th inning of AI and we're in the 4th inning of this. There's 9 innings in a game. I'm telling you, we haven't even gotten in the car to drive to the game yet with AI. We are in such the early stages. We do see a lot of the application on the military side for AI. There's a lot of application. There's some low-level application in commerce as we would know it. It's growing daily. These large language models are improving themselves on a daily basis. Just in the Wall Street Journal this morning, there's an article about people in the workplace excelling in the workplace as they get good at AI, and the people that aren't using AI aren't excelling as much. And here's what I wouldn't do with AI. I wouldn't use the product and then claim that you did it. You know what I mean? I wouldn't take credit for something you didn't do. But I would as a member of the workforce, use AI to improve your performance. If it's possible to do that, I would do that. I would use AI to do that. So risk assets are still on. They're definitely still on, and they're going to stay on because the Fed has told us as much. And we know two things. The first thing that we know is Chair Powell is out. He's not getting renominated. Donald Trump called him a nincompoop yesterday, and I thought, yeah, that's it. There's no way he's getting renominated. It wouldn't happen in a million years. And the next person to take over the Fed is going to lower interest rates. They're going to make sure that that happens. So risk assets are still on. And if they don't cut in December, which there is question on whether they're not going to do it, I was listening to somebody talk this morning from the Fed, and they said, well, we don't have any information. All you got to do is look around. You know, economists are they're so stuck in their ways. We're data dependent. We don't have the data. You got a lot of data. Just look around, look at what's selling, look at what's not. We can be intuitive people here to say, well, the job market probably is a little weaker than what we wanted. Inflation numbers are coming down. You can see all these things. Look at the price of eggs. The things that went up in Biden inflation, they're all coming down. Inflation since Donald Trump has been president has been 1.9%. You know, the Fed is going to lower rates. The Fed should lower rates. It would be really good for the economy to get mortgage rates sub 5%. Below 5%, right? Sub 5%. That would be really good. Housing would move. People could then almost realistically say, well, I got a 3.5% mortgage and I'm going to get a new one at 5%. It's not that bad. So the AI trade is still on. Like companies like Palantir blew their numbers away this past week, and they've been on a slide. It was last week, and they've been on a slide ever since. Palantir is going to be just fine. You know, things that go up really fast like that, they tend to get a little gravity in their stock price from time to time, and so people will buy the rumor, sell the news type of thing, and that's what happened to Palantir. I'm not worried about Palantir. They're going to be just fine. They grew their domestic revenues by 160% or something like that. It was a huge number. It's a huge beat. The only bad thing for Palantir is that Kathy Wood she's a big money manager on Wall Street. Kathy Wood came out for Palantir, so we're probably doomed, but that's a joke. We're not doomed. So there's so much going on inside of AI and around AI and with AI chips and all of that. I don't even really think that you could cover all of it. I think it's almost impossible. So, but it's not the only thing to invest in. It's one thing. Don't just buy tech. Buy a lot of different things and diversify your portfolio. We own other things beside tech, beside AI. We own a lot of stuff besides AI and tech. We own consumer stocks. We own industrials. But they all kind of use AI, but yeah. So I did get another crypto question this week, and I wanted to answer that. So the question is, what is happening to crypto? It's been really volatile, mainly to the downside, although Bitcoin did recover a little bit. I think it has a lot to do with stable coins. So banks are coming out with stable coins, and stable coins are going to fill some of the need that crypto was originally meant to do, which is transfer of wealth, transfer of money, transfer for value without having to use intermediaries like PayPal or Zelle or other things like that. Now, the thing about crypto that I do like is that you can do that. You could set up an account at Robinhood, for instance, or other places, Coinbase. I don't want to just say one name, although I really do like Robinhood, especially now that they're doing big boy things. When they first started, they weren't. They were doing little boy things. Now they're doing big boy things. But stable coins are doing what I I think stablecoins are doing to Bitcoin what Bitcoin did to gold. When you look at what happened to gold in the highest inflation, so gold is an inflation hedge mainly. It's a fear trade. It's an inflation hedge. It's the in case of emergency break glass trade type of thing. And when inflation was at its highest, gold just sat there, and Bitcoin caught the bid. And I think Bitcoin, in some sense, cryptocurrency, in some sense, has taken some of that luster away from gold, because, yeah, gold. So I was talking to somebody that owns gold, and they asked me, "Well, what do I do with the gold? How do I turn it into currency?" That's a great question. How do you do that? How do you do that? So the people that sold gold, there's a commission when you buy the gold. There's a commission when you sell the gold. You got to take it to them. You don't have to do any of that with cryptocurrency. It's just bam, you sell it, and they have the money. So I think stable coins are doing a little bit of that to crypto right now. All crypto, not just Bitcoin, all the crypto. So in some sense, it's getting played on a little bit from the big banks that are taking some of kind of the cachet away from crypto in general with stablecoin. So stablecoin, you can transfer value without using the intermediaries. And there's no such thing as a secret trade anymore. Everybody knows who owns the Bitcoin. The government knows. In fact, I wouldn't be surprised if the CIA invented Bitcoin just to track drug dealers and money launderers and the mob, people like that, because at the beginning it was the currency of criminals and despots around the world, and that was the big thing. How do you track how this money moves when it's cash? Well, you can't. You can't track cash. If I handed you $1,000 right now, the government doesn't know about it. They know I had the $1,000 because I probably took it out of an account. But what happened to it after that? Nobody knows. So in that sense, that's what's happening to Bitcoin right now and crypto in general. I am David Szafranski, a real American, a true red-blooded patriot, and the voice you can trust.